market on close. I'm Alex Coffey. Microsoft announced another round of layoffs. Joining me for more on the developing story is Christopher Davis, partner at Hudson Value Partners. Christopher, thanks for joining me here on this holiday week. Let's start big picture. Obviously, this is second in as many months of Microsoft's trying to shrink down their staffing here a little bit. What do you make of it? Is it alarming or just everyday run-of-the-mill efficiency cuts here?
I think while Doge may have retreated from the headlines for Washington, within corporate America, efficiency as a theme is still alive and well. We've been long-term Microsoft shareholders at Hudson Value Partners, and I think after a while you get used to the fact that Satya Nadella is going to continue to make some bold moves. They want to focus and invest in innovation, and he's going to continue to do that. So I applaud today's moves.
So when we look at what we know about these moves, it does seem like they're targeted to particular areas of the company, and I'm guessing they're not AI-related cuts.
No. From everything we know, they appear to be targeted in some elements of the sales force, but primarily within Xbox and gaming. And it's about 4% of the company, so not a rounding error. It's definitely significant cuts here. And I think it shows that this is a capital allocation decision. In all businesses, capital allocation is key, and this frees up some human capital, some monetary capital for them to be able to allocate back into AI, because that's where growth is. Gaming and has been a flat market for them in the past few quarters. It's a solid business. Xbox is a great franchise, but it doesn't have the growth profile of the cloud or AI at this point.
Yeah, and it seems like it's all about the cloud, right? I mean, we were just talking to Oracle earlier, the OpenAI announcing needing some gigawatts from them with their Stargate project, but it seems like Microsoft's out in front when it comes to AI cloud infrastructure. And I had somebody on the other day was kind of calling all these companies almost like they're competing, but they're almost friendly competitors as they work together in many of these projects. When you look at where Microsoft fares versus the other big public cloud AI companies, where do you slate it?
I slate Microsoft as the leader. Certainly in share price performance, they've bested Amazon and Alphabet this year. Meta is in sort of a different business, but if you're in that true enterprise, that Fortune 500 business, that's something that Microsoft really leads far and away. I think the stat is something like 90% of the Fortune 500 is using Microsoft tools in some way. So I think Microsoft has a truly dominant position there. But Oracle is certainly nipping at their heels, definitely competing on price more, and it's something that they have to watch out for.
Christopher, question for you, because as we watch AI kind of disrupt technology and continue to drive efficiencies and new possibilities, you're seeing companies, and I know it's very different, like Adobe, really see their a threat to what seemed like a market share that was impenetrable just 5 years ago. Microsoft seems like it's in that position right now with these long-standing relationships sprawling across so many different types of B2B businesses, consumer uses, and of course the infrastructure uses that we're talking about. When you look at Microsoft, what can really disrupt it? If you're trying to be an honest assessor of whether or not I should be long or short or not involved in these shares, like what's the bear case for Microsoft opposed to, hey, the stock's done really well?
Yeah, the bear case for Microsoft right now is valuation. It's an expensive stock. It is probably one of the more expensive stocks we own. You're looking at something like 36 times forward earnings at the current level. So we need to continue to see earnings growth for them, and I think we will. You compare it to Adobe. Adobe faces challenges from the likes of Figma and Canva that have truly disrupted it. If you think about Microsoft, they have 430 million Office 365 paid users. Highly sticky within that ecosystem, everything from Teams to Outlook and in between. And you look at all over Microsoft's now 50-year history, the competitors they've been able to fight off, whether it was Lotus Notes, Corel, WordPerfect. Apple has tried to come out there for years, and even on the free side, the Google Sheets and Google word processor, they really have never been able to take market share. So if we saw a true competitor or one of those come up, that would certainly call into question the moat for Microsoft. But at now, I think it's quite secure.
You mentioned Oracle competing on price, obviously with cloud driving the lion's share of the growth for Microsoft, a higher margin business typically in this kind of macro world where margins are expected to contract for many businesses with trade policy, maybe even just economic slowdown as well. How intact do you see the margin story at Microsoft with companies like Oracle trying to compete on price?
Well, at 67% margins on the cloud and the server business and the AI business, I think they're in good shape. They definitely have some room to come down. And as always in new businesses, when you have strong margins, they contract over time. That's just the nature of competition. But I think Microsoft's in a good position. And you've seen the US government defending them through fighting off digital services tax. And also Microsoft is a truly global business. They have, local for local data centers around the world, which helps to insulate them within some of these trade tensions as well.
Christopher Davis, thank you so much. You have a great long weekend. We'll catch up soon.